Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks for having me on the show, Jim. It is always a pleasure.
Rick, the U.S.-China trade talks, China making some new demands that a few $1 billion worth of tariffs be removed before they sign anything. Is this agreement going to amount to anything if it does get signed, if certain things are already being removed?
How is that even possible? You know, if there were substantive progress, if these talks really delivered something of value, then we would see the Chinese say, hey, we're going to be honest traders. We're going to reform all our bad ways. We're not going to be requiring companies that want a piece of the action here to give up all their patents and trade secrets. There's no way any of those issues are going to get resolved. So don't look for much in this agreement, even though it's being used to kind of talk up the stock market and for Trump to talk up his own book.
Mm-hmm. Now, wasn't the whole purpose of these trade talks was to get China to remove their so-called trade barriers, allowed more foreign companies in, and to remove their insistence that all your company's secrets had to be revealed to them if they allowed you to come in and do business?
Yeah, and also to get some legal respect for intellectual property. I mean, the Chinese have stolen everything that they make, all the processes. Some of this theft has been really pretty brazen. So the purpose was to make China essentially be honest in world trade. But as I said, that's never going to happen. And what we've got is a whole bunch of tariffs. And of course, when the tariffs come off, we'll be kind of just where we started from. And except the stock market, that will be thousands of points higher. So we know that it hasn't been the trade talks that have driven the market higher. It's just the cyclical nuttiness that is a part of every bull market.
Traders have counted, I think, on this trade war to deflect you from what's really going on behind the scenes. Is that the case?
Yeah, I mean, every day you read in the Wall Street Journal if the market's up, which it is like 9 days out of 10 lately, you read, well, optimism about trade talks, but what the heck are they talking about? You know, there's as I was just saying, there's nothing to be optimistic about other than getting back to square one, which means we wouldn't have hundreds of billions worth of tariffs in effect. So, we'll get back to business sooner or later, but the way the trade talks have been staged for purposes of spin control, we've got Trump saying this is just phase one. So you know that they can spin that out for at least till the election, and who knows, if Trump gets reelected, he could keep spinning it for another 2 or 3 years. But when we talk about phase one, if you look at what we're actually getting in phase one, there's nothing there. But again, we see headlines every day, market moves because of trade optimism. That's such a bunch of baloney.
What should the market be doing right now if it wasn't being manipulated for what looks like it could be political purposes?
Well, you can only manipulate so much, and I would say Trump was pretty direct about the manipulation. For one, the tax reform, I use that word reform in quotes, brought so much money that was sitting in offshore accounts for these big companies. It brought so much of it back into the U.S., and something like $2 trillion worth of it was shot into the market in corporate buybacks. So, that's one way that the market's manipulated higher and higher. But really, it's just we're in a bull cycle. Things are crazy, and whatever explanations you want to come up with for why stocks are moving higher, seemingly against all reason. We've got a gathering storm here. China and Europe expansions are weakening, or they're not even expanding, really. Europe is probably in outright recession now. And we get headlines just the same. Last Friday in the Wall Street Journal, well, seems like the U.S. really is an island. Everything's going great guns in the U.S. That's impossible. It's impossible. And we wind up really in a situation like we're a nation of shopkeepers. We're kind of shining each other's shoes and cutting each other's nails and doing each other's hair and calling that prosperity. But we cannot generate prosperity internally with consumption, especially if we're not if we're so deeply in hock that we absolutely need to sell outside of the domestic market to essentially bring capital into the country.
Mm-hmm. It's the only real export of the U.S. oil and natural gas.
We certainly export a lot of that, but it's really funny. I just saw a story about hauling coals to Newcastle. It was where was it? Was it Louisiana? No, I'm sorry. Puerto Rican gas is coming from Russia because of a rule on the way tankers flag would have to be 50% U.S. owned, and there are no tankers on the planet capable of delivering the quantities of natural gas that Puerto Rico needs, other than ones that are flagged other than U.S. So we've got a pretty good business going there, but the peculiarity is that the frackers are no longer making any money, and that's going to probably push. It's going to crimp supplies, but it doesn't seem like any nation on earth is starving for energy right now.
Chesapeake Energy says it's on the brink of collapse. Is that a hint that perhaps the U.S. oil and gas industry might be on the brink of something bad as well?
Well, I would say when you talk about on the brink, it's probably more closely related to patterns of consumption. And just as GM, General Motors, ups and downs no longer drive the economy, or no longer even a telltale, I would say neither is energy. Our economy is so short-term focused on borrowing and spending, consumer spending, which now accounts for, it used to be 2/3. Now I think it's 70% of GDP is generated by consumption. But we're not getting much stimulus there, certainly in manufacturing on the capital investment side. And even though you read, all the stories you read suggest that the U.S. economy is doing great, I think without even being an economist, you wonder, is it really true? And it's certainly untrue in the respect that however much prosperity we've had over the last few years, we still haven't gotten out from under the debt load that's eventually going to become crushing. So, and I think we're doing a little better than past phony recoveries, phony booms, in that it's not all McJobs, but certainly there are a lot of burger flipping jobs that account for this, the low unemployment. But I just, I'm not quite so sure that statistically speaking, what you see is what you got. It's, I just don't, the economy has not grown. It's not booming quite enough that we're dealing with huge debt overhangs that are going to kill us.
We'll have more with Rick Ackerman right after the break.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Rick Ackerman. Rick, is the U.S. Fed going to continue to cut rates?
Well, they've sure got everybody believing that they won't. I mean, some quote-unquote responsible types have gotten out there, including Goldman Sachs CEO, saying, I think they're done. And if it was difficult a few months ago with everybody fearful of what the tariff war was going to do, if it was difficult then to make the case that the Fed should be loosening, it's harder now. I mean, from a statistical standpoint, the U.S. economy really is going great guns. And to the extent that they were still loosening to ostensibly to head off a slowdown because of the tariffs, well, we're enough into the tariff war that you can't make that argument anymore. And to the extent that the quote-unquote negotiations are pivoting on maybe the U.S. Taking off something like $360 billion of tariffs on Chinese goods, everything's go. I mean, I think that's why the market's as feisty as it is these days, because it has to. Wall Street has to, at this point, admit, hey, maybe we don't need the little stimulus to overcome the drag of tariffs. We've already proven that we can. But again, I'm not making that argument myself. I think that a global slowdown in trade eventually has to take its toll on U.S. output.
What about this so-called non-quantitative easing, $60 billion worth a month?
Well, there's all kinds of ways that you can put money into the system. And I think we discussed this in our last conversation. One very direct way is by way of when you bring the mortgage interest rates down, that's a direct shot in the arm. It helps households become more liquid, and it definitely increases consumer spending across the income spectrum. So that's just one way, but there's so many other ways that money gets in the system that we can't even track it anymore. The monetarists all have their definition of inflation being an increase in the money supply, but nobody even knows what money is these days. It's very complex as to how money is created, and very often it's created as in the way of alleviating debt, even on overnight borrowing. So you can list out 100 ways in which we have quantitative easing, but nobody really understands the whole picture.
Is there really a mini housing boom in the U.S.?
Well, there is. It's an odd market. We've got a collapse coming at the very, very high end, and on the low end, first homes and starter homes. The weird thing is that people supposedly are staying in their homes longer, and this has been an amazing change statistically, because over the last just 7 or 8 years, the average time that people spend in their homes in some key markets, and this is across virtually all, I think it's 55 metro markets that are surveyed, it's all 13 years, up from maybe 10 years. So there are so few houses on the market that it does drive prices up, or it certainly keeps them buoyant, but it keeps the number of transactions down. So you can only have so much of a boom. And we've got another component of it that's weird. It's never happened before, but I think that something like, it's 11% maybe, or maybe more than that, of all new home construction is building homes that are going to be turned as investments. So we've got private equity building homes right now that will be rented. They're not going to be owned. So we've got a nation of renters, and Gary Schilling put out a really interesting piece the other day about how the millennials are really better off renting than owning. They may all curse the fact that they're not making enough to afford new homes, but on the basis of when you get down to brass tacks, they're doing better rent right now. And he pulls out some pretty interesting statistics that Schilling himself tracks home prices, but corrected for improvements that are made in the homes and things like that. And all things being equal, as far as size and materials and all that, there's been relatively less appreciation in homes than you might think over the last 20 years. So that is probably registered subliminally with the millennials, especially since we don't get into homes these days thinking they're going to double in value every 5 or 6 years. So the home market is a mixed picture, but I think if you look at it broadly, we're inflated as all get out. There's too much money in homes, and the home prices are too inflated. And Alan Greenspan might say, as he did once, well, we're all getting rich because of that. But we know better, or if we don't know better, we're going to find out better.
Well, wasn't the point originally of home ownership that at some point you're going to stop paying a mortgage, and that's going to be a huge saving for you? It wasn't so much that you're wealthier, you just have to lay out less money.
Well, we are on the opposite end of that ideal, that kind of rosy picture. Now, the extreme opposite, because now many people, particularly the ones buying 900 square foot Eichlers in Southern California for $1.2 million, or even more in Mountain View, we don't buy homes anymore thinking we'll ever own them. We're just sort of paying the rent, as it were, in the form of a mortgage. And I think we've talked about that before too, that when the economy goes into an outright deflation that leads us to the second Great Depression, that most of the mortgages that are in existence now will be rewritten as lease agreements. To me, that's inevitable. I don't see a way around that. And I know most observers, most experts would say, well, this guy's a lunatic. But I really feel like not only is that not a crazy prediction, I think it's inevitable that a collapsed housing market is going to lead to statutory change in mortgage agreements so that they become leases. And if that ain't deflation in spades, I don't know what is.
We'll have more with Rick Ackerman right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, is gold still going to be shiny, or will the shine come off the precious metal?
Well, I'm less shiny than some shiny guys out there. I'm not thinking about gold 5,000, but I could certainly imagine gold 2,000, which would be a nice move from here. Gold has come down really hard today, and from a psychological standpoint, you're probably pretty depressed. But from a purely technical standpoint, gold is still within a choppy and up and down pattern that's been in effect for about a month. So I think gold is taking its lumps here, but it's not the end. I see higher highs for gold, and I would certainly stick with it. It's had its problems because the chimpanzees who essentially throw other people's money at stocks, they've been so fully engaged pushing stocks up that they can't breathe and chew gum at the same time. So if they're buying stocks, they're either ignoring gold or selling off gold. So gold has kind of struggled against a relentlessly wafting stock market.
Rick, anything else you wanted to add to today's show?
We do usually, a lot of times we kind of wrap up with I still like bonds. And bonds have been hit pretty hard too. And you'd almost think that we're about to inflate our way to oblivion, and that the economy is going to boom. So because that's not going to happen, the big sell-off that's occurred in bonds it's just a little fright mask effect. So we may not have reached a bottom, but I think in bond prices on this correction, but I think bonds are going to be back at them, and we're going to see the 10-year maybe down below 1.5%, 1.4. So there's still things to come there. And as far as the big picture, I'm just trying to get out of my own way there. I can give you 20 reasons why the Dow should be at 10,000 now rather than 26,000. But there's no point in if it ain't ready, it ain't ready. It's I'm using Apple as a bellwether, and I want to see Apple hit 283 before I think maybe we're at a possible top. But Apple is currentent trading at let's see, 257. So it's got a 26 point move, a little more than 10% before it hits that target. And if it's going there, then the economy, the U.S. stock market is not about to the bull market's not about to end.
Rick, thank you so much for being on the show.
Well, thanks for inviting me, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.